What's up, crypto fam? Bitcoin Bulletin is live and the market is absolutely exploding with action. We've got tectonic shifts happening, fortunes being made, and headlines that you cannot afford to miss. The crypto cosmos is buzzing, and if you're not plugged in, you're missing out on the biggest moves of the year. Get ready for a rapid-fire rundown of the news that's shaping our future, from record-breaking price targets to bold national strategies and the unseen forces powering the next wave of innovation. First up, we're diving deep into the unbelievable potential of the BlockchainFX Presale, with analysts hinting at a potential 100x return that could dwarf even Bitcoin's massive rally. Next, we're breaking down the electrifying prediction that Bitcoin could be on its way to a mind-blowing $150,000 by 2026. We'll explore the powerful forces, from Wall Street's embrace to built-in scarcity, that could make this ambitious target a reality. Then, we shift gears to El Salvador, where the nation is making a massive strategic play by adding a significant amount of gold to its reserves. We'll uncover what this means for their diversification strategy and the future of their bold Bitcoin experiment. And finally, we're looking at the intricate dance of Bitcoin mining. The network difficulty is hitting new all-time highs, but miner revenues are taking a hit. We'll dissect what this means for the miners and the overall health of the Bitcoin network. Stay locked in, because this is where the real alpha is found. Hit that subscribe button and ring the notification bell so you never miss a beat. The BlockchainFX Presale is the real 100x story. Forget the incremental gains on Bitcoin and Ethereum. The true explosive potential is brewing in the presale market, and BlockchainFX, BFX, is leading the charge with a vision for a crypto-native financial super app. While Bitcoin eyes $118K and Ethereum pushes towards $5K, savvy investors are looking at presales like BFX for the next massive multiplier. This isn't just another token. BFX aims to consolidate trading across crypto, stocks, ETFs, forex, and commodities onto a single, seamless platform. What truly sets BlockchainFX apart are its robust tokenomics and utility. Early investors are already seeing a guaranteed 127% lift, with a confirmed launch price of 5 cents from its current presale price of 0.022. But the long-term outlook is even more staggering, with projections of 100x to 500x returns if BFX reaches $1. The project has already raised over $6.8 million from nearly 8,000 investors, showcasing strong community momentum. Security is paramount, with full audits from CertiK and Coinsult providing confidence. Mechanisms like staking rewards, up to 70% of trading fees in USDT and BFX, and a BFX Visa card for real-world spending further enhance its appeal. Analysts are buzzing, calling BFX the best crypto to buy now, drawing parallels to early investments in Ethereum, Binance Coin, and Solana, which delivered life-changing returns for those who acted decisively. The community is rallying, with weekly price increases signaling that missed stages mean lost opportunities. Don't blink, or you might miss the next major breakout. But first, can Bitcoin really hit $150,000? We've got the breakdown. Bitcoin to $150,000 by 2026, a Wall Street and code-driven reality. Once a fringe internet fantasy, Bitcoin hitting $150,000 is now a serious discussion point on Wall Street, driven by a potent mix of programmed scarcity and institutional capital. The core of this bullish case lies in Bitcoin's fundamental economics, the halving event. The April 2024 halving reduced the new coin reward to just 3.125 BTC, a pre-programmed supply shock that has historically catalyzed massive price rallies. This cycle's demand side is amplified by the groundbreaking approval of spot Bitcoin ETFs in the US. Firms like BlackRock and Fidelity have already injected billions, with significant weekly inflows continuing. These ETFs are absorbing Bitcoin supply faster than miners can create it, creating a classic supply crunch. Simultaneously, Bitcoin's network security, measured by its record-breaking hash rate, is stronger than ever, appealing to institutional investors. Furthermore, advancements like the Lightning Network are enhancing Bitcoin's utility for everyday transactions, with payment volume reportedly soaring. The macroeconomic landscape also favors Bitcoin, as anticipated interest rate cuts by central banks could drive investors towards riskier assets for higher returns. However, the path is fraught with challenges. Regulatory clarity, while improving with frameworks like Europe's MiCA, remains a tightrope walk, with potential crackdowns posing a significant risk. Skeptics like Mike McGlone warn of correlation with the stock market, predicting potential crashes, while Peter Schiff maintains Bitcoin has no intrinsic value. The persistent narrative around Bitcoin's energy consumption, despite industry claims of increasing sustainable sources, remains a major hurdle for ESG-conscious investors. Will the code and the cash win out, or will regulatory fears and ESG concerns derail the rocket? We're heading to El Salvador next, where gold is making a major comeback. El Salvador bets big on gold amid Bitcoin pause. El Salvador's Central Reserve Bank has made its first gold acquisition since 1990, purchasing nearly 14,000 troy ounces valued at $207.4 million. This strategic move diversifies the nation's international reserves, occurring precisely as the country confirms a pause in its daily Bitcoin accumulation strategy. This diversification aligns with global central bank trends, as gold represents a significant portion of international reserves worldwide. The acquisition follows the IMF's confirmation that El Salvador halted its Bitcoin purchases in February 2025, a step back from President Nayib Bukel's ambitious daily buying plan. While on-chain movements suggest continued BTC activity, the IMF attributes these to internal transfers rather than new state acquisitions. The gold purchase itself strengthens the Central Reserve Bank's assets, coinciding with improved macroeconomic stability under Bukel's administration. Gold's role as a universal strategic asset provides a secure and diversified foundation for the nation's long-term reserves. El Salvador still holds approximately 6,244 BTC, valued at $742 million, with its treasury reportedly holding a 127% profit based on an average acquisition price of $46,000. This shift also comes after legislative amendments eliminated mandatory Bitcoin acceptance for businesses, aligning with a $1.4 billion IMF loan agreement. The IMF praised these reforms for reducing fiscal risk and enhancing transparency, though they pushed El Salvador to classify crypto as a financial asset, not currency. In a move highlighting forward-thinking security, El Salvador also split its Bitcoin treasury across 14 addresses to guard against potential quantum computing threats, addressing concerns about future cryptographic vulnerabilities. Is El Salvador hedging its bets or setting itself up for a new chapter? From national strategies to the very backbone of Bitcoin, we're examining the mining difficulty. Bitcoin mining difficulty hits record high amidst revenue squeeze. Bitcoin's network difficulty has surged to an unprecedented high of over 136 trillion, presenting the most challenging mining environment to date. This significant increase, marking the fifth consecutive rise since June, means miners must deploy more computational power than ever to validate transactions and earn rewards. The difficulty adjustment mechanism, recalibrating every 2016 blocks, ensures block production remains near the 10-minute target, but the current surge indicates a massive influx of mining power into the network. This heightened competition arrives at a critical juncture for miners, as their revenues are simultaneously declining. The hash price, a key metric for miner revenue per unit of computing power, has fallen to around $51, its lowest point since June. This revenue pressure is exacerbated by a sharp drop in transaction fees. In August, miners collected an average of just 0.025 BTC per block, a nearly 20% decrease from July and the lowest figure since late 2011. In dollar terms, daily fee income plummeted by almost 20% month-on-month, hitting the lowest point since early 2013. This perfect storm of record difficulty and shrinking revenues puts Bitcoin miners in a precarious position, operating on razor-thin margins. Profitability will heavily depend on a significant rise in Bitcoin's price or a surge in on-chain activity to boost transaction fees. The situation underscores the cyclical and often brutal nature of Bitcoin mining, where only the most efficient and well-capitalized operations can weather these storms. Can miners survive this squeeze, or will difficulty levels force a shakeup? Stick around as we wrap up all the day's biggest crypto stories. And that's a wrap on today's explosive Bitcoin Bulletin. We saw BlockchainFX hinting at massive 100x gains in its presale. Bitcoin's ambitious $150,000 target by 2026, fueled by ETFs, and halving, El Salvador strategically diversifying with gold amidst its Bitcoin journey, and Bitcoin mining difficulty hitting record highs while revenues face pressure. Don't miss out on the next wave, smash that like button, subscribe for more alpha, ring the notification bell, share your thoughts in the comments, and follow us on all social platforms for real-time updates.